Taiwanese index absolutely flat, but some positive buys there.
I think the main story in the US is the Fed. So Wednesday will matter, is the labor market. So Friday will matter.
Going down by 2.5% to 3% in Q3 versus Q2. Okay, so therefore, I don't think there is any big change vis-a-vis our earlier assumptions.
Kotak believes that Laurus's trouble in the AVR pricing and looming cessation of Paxlovid sales are being underappreciated.
18,594, almost back at new highs.
Consensus GDP growth numbers from our economist perspective as well for developed and developing economies will probably be revised down by at least 50 to 100 basis points. And I think earnings downgrades will probably follow suit.
At 18,600, the risk reward definitely is not in favor of large caps as we speak.
News is that their subsidiary in Brazil, in fact, has signed an agreement to acquire 9 medicines from Bosch Health.
Record highs yet again, right? On the Nifty and the Sensex, on the Nifty bag.
In the block deal data, we got to know that Small Cap World Fund has sold 12.72 lakh shares of the company at 920 rupees per share.
This is the first time that any stakeholder or creditor that is part of Jet Airways' resolution process has asked for liquidation of assets to get their dues.
All right, well, that was a day so far. You're with us here on a fresh new edition of Closing Bell. I'm Prashant. With me, my colleagues Rima and Mangalam are joining in on the show as well. You know, as we begin another edition of Closing Bell, there is a bit of a cut which is emerging. So, I mean, you know, even 7-8 minutes back, the market was at the day's high, which is not the case anymore. You know, the high, we're about 40 points off the day's high now. The day's high today has been, what, 18,678. We're at 18,647. And all of the turn has happened since about, 223, 224 onwards, that dip that you're seeing at this point. Will this develop into something larger is what we have to see. So far, the day, during the course of the day, momentum has been with the bulls and, markets done very, very well. Just a few points on the sectoral color we are seeing. FMCG, of course, is the standout performer. Metals and public sector banks are some of the others. Pharma, it's some up, some down, but as an index, it's higher. Mid caps and small caps are taking it a bit easy. Both indices are down, but not much. 50% of the Nifty gains are coming through from 5 stocks. The last I checked, HUL, ICICI Bank, and Reliance. Of course, Lever with that 3% pop is making all the difference today. And the gap between overall advances to declines on the NSE has been closing all day. I mean, it started at the day's high, advances to declines ratio, and now I think there's about 100 stocks which separate, the losers, the gainers and the losers at this point in time. But another day, another record high. What from here is the question, isn't it, Rima?
Hi, Prashant. Hi, Mangalam. The stocks which have taken a turn in the last few minutes are a couple of these pharma names. So Dr. Reddy's, Divi's Laboratories. In the last 15 minutes, we've seen selling pressure coming through in them. And a couple of auto names like Maruti and M&M are now at the day's low. But apart from that, a quick check on what happened across Asia this morning. Remember, there was this important press conference by China, and the signaling from Beijing appears to be that it is preparing for a broader reopening. So what were some of the key takeaways? They are seeking to increase the vaccination for the elderly. The State Council also said that they will hold the officials doing excessive COVID curbs responsible. So all in all, the messaging is that the officials have showed empathy post the protest and not taken very stringent action, and that is something the street is like. So take a look at the way markets linked to China reacted today. Hang Seng up more than 5%, Chinese markets 2.3%, Korean markets, Taiwanese markets also higher in trade. The rest of the pack, Nikkei, for instance, in Asian markets is down close to about 0.5%. European markets are holding up with mild gains. The CAC and the DAX just up 0.1%, 0.2%, and the Dow futures too, currently suggesting that after yesterday's decline of 1.5%, the gain today could be fairly muted. So you would say, all in all, that the rest of the global markets are trading just with a positive bias, something that we're seeing in our own markets, Mangalam.
We are indeed, and the interesting part, however, though, is that, as Prashant pointed out, the mid-cap underperformance really stands out in terms of the performance that we've seen. Even all of last month, we had the mid-cap index underperforming. But as market scales new highs, it's interesting to see that, bulls get their gusto back. And that's what we're seeing in the way the options are moving as well. This morning, we sustained above that 18,600 mark for fair bit, and as a result of which the 18,600 put writers got into the action. And as we speak, we've seen almost 88 lakh shares written on the 18,600 put. On the other side, as we're closing in over that 18,650 mark, bulls believe that maybe this is another level that they can work with in terms of support going forward. So we are seeing a fair amount of put writing at the 18,650 mark as well. The combined premium on 18,600 and 18,650 is anywhere between 40 to 50 odd rupees. So that's telling you that, levels around that 18,550 to levels around that 18,600 would see strong support every time the market would show a bit of a dip. But bears, they are not giving up on that 18,700 mark, because the 18,700 call has continued to see a fair amount of writing. 22 lakh shares added in open interest on that one as well, with a premium of 40 odd rupees. So that's telling you levels upwards of 18,700 may find some congestion, and that's something that we've been witnessing today as well. As soon as the Nifty goes closer to that 18,700 mark, we do see a wee bit of resistance. The question is, for how long will there be resistance, or for how long can our outperformance continue? For now, things are not looking too bad.
No, indeed, they're not. Let's tell our viewers what we've lined up for them this Tuesday afternoon on Closing Bell. FMCG stock surge and trade, what's gotten the stocks excited, a quick explainer coming up on the show. We'll track the market technicals with Jay Bala of cashthechaos.com. We'll be joined by Rajesh Kothari of Alpha Accurate Advisors to talk all things macro and discuss his top sectoral bets and key excerpts from a conversation with Market Voices Rahul Sharma and Jitanya Kandhari, also coming up later on the show.
Okay, well, so that's the lineup as always. But what should you be doing now with the Nifty, with your stocks? Mitesh is with us as always on the top of the show to help us with that. Mitesh, hi. Afternoon, 80 points. I mean, a bit of a cool off, some 40-45 points from the day's high. What would you do?
I think, Prashant, a good way to figure this out is to possibly trade your stop losses. Now, the only worry is that we are slightly getting close to overbought levels on the hourly and the 2-hourly chart. So, profit booking is something which cannot be ruled out. And therefore, I think trading the stop loss could be an important level. 18,550 on the spot should be for somebody who is slightly conservative, but 18,590 for somebody who's more aggressive, I think, are the recommended levels on the spot. If that doesn't break, then I think, we might get close to 18,750, which is the target which we're looking at. And we got a high of nearly 18,678 today. So the only worry is my overbought position, which could, lead to a day or two of profit booking and consolidation. But otherwise, the structure is pretty good. So trading with long bias. JSW Steel, that's broken out, that's a buy. Keep a stop below levels of 724, look for targets of 755. And reversing from oversold levels is ICICI True Life. That's a buy as well, with a stop below levels of 464 for targets of 485.
Those are some last hour strategies, but it's FMCG stocks which are surging in trade. Mangalam, there has been a lot of news flow as well for individual stocks.
There has been a fair amount of news flow for individual stocks, but none that, would move the needle too much. But as far as the moves are concerned, it's been a sectoral call, I think, from some institution, etc. Nimesh will perhaps tell us more. But the way we've seen HUL, Nestle, Britannia, all of them move in today's trading session. And why just the biggies? We have a lot of these non-indexed large caps as well, the likes of Godrej Consumer, Dabur, Marico, Colgate doing well too. So to give you a roundup of all the news pieces in specific stocks that have come by over the last couple of days, and today in specific, we have Nestle, where the global parent PLC has upped the current year growth guidance from 8 to 8.5%. Nestle India accounts for about sub 5% of their overall sales and profit, but it has been growing faster than the global average anyway. So, it's a mild positive, an incremental positive, so to say. Dabur has announced that they will launch their D2C platform by end FY23 on a pan-India basis. So that could be incremental sales coming in for them as well. Britannia has announced a joint venture with a French company to develop, market and sell cheese products in India, which account for about 2.5% of their overall sales. So incremental positive there too. Colgate, we had Prabha Narasimhan speak to CNBC-TV18 for the first time, saying that their key goal is to drive performance, keep up with the environment changes as well, with regards to the business volatility, etc. So that would be a positive. And GCPL, Sudhir Sitapati this morning told our colleague Shilpa that they've seen some moderation in input prices, and the key problem for them, Indonesia, is improving, and he's bullish about that. So there are incremental positives, but nothing to move the needle. What is it that could move the needle? Two things. One, we're in the second half of this year, post-festive season. Will demand pick up post-monsoons, etc. is the big question. And secondly, raw material costs are lower. Importantly, all the high cost inventory of these companies have been exhausted, and everyone talks about margin expansion in the second half. Now we are in the second half. Important to see whether these FMCG companies actually go ahead and deliver what they've promised. So maybe that is where the street is betting on these stocks. Earlier today, we spoke with Rahul Arora as well, and he had a view on rural demand as well as HUL. Let's hear him out.
I was at the Hindustan Lever analyst meet recently, and they actually spoke about 1/3 of their business that's coming in from premium products. I don't know how much of that is being driven through rural, but when I hear what Britannia, Parle, Dabur are saying on the rural side, it almost seems like things are at a cusp. So I think the challenge could be probably for the next 6 months, of course, as you get into the winter crop and if things are good. The point I was making is I don't have too much visibility from the next 6 to 8 months.
All right, that's the FMCG pack in focus. Prakash Devan is now joining us on the show to take some questions. Prakash, great to have you on the program as always. Your thoughts, Prakash? I mean, this is a space which has been hurting because of largely primarily rural slowdown. And we've heard it from companies themselves at the end of the last quarter. But is it getting to a point where one should look at this space constructively? Your sense?
Good afternoon, Prashant. So, we spoke about this a couple of weeks back when I was mentioning about all the, belt tightening measures that companies undertook, particularly in Q1 of this financial year, and also, to a large extent, halfway through Q2, was essentially to override, all the pressures from some of the ancillary costs going up, not directly maybe raw material as much, but, the packaging costs, logistics costs, all of those. Now, that seems to be something which is actually eased off. Whereas they've already done measure, there's a huge amount of digitization that a lot of these companies have involved themselves into at the dealer level, which is making a big difference, where it doesn't hurt the dealer to kind of, order inventory at just-in-time basis, or, something almost close to just-in-time basis. And all of that is actually translating into benefits or gains when things start normalizing. So when input costs start getting a bit more benign, you actually have all these measures throwing up much more better margins. And, the kind of commentary that's coming out of some of these MNC companies for their India businesses is talking about margin expansion. So that's great news after almost, 5 quarters of margin stagnation or erosion. And that's precisely what everybody is looking at. And, the other thing that really works, the tailwinds of market at all-time highs is something where you would need to look at hide under some sort of a safety net. FMCG still offers that, especially consumer staples. So I think it's, since pharma is not offering that flight to safety, or IT is not doing that, probably FMCG was a pocket that was kind of undervalued. So that's where a lot of money is going in. But, this could probably be short-lived if the volumes don't deliver. But, so we'll have to wait. Festive season is anyways past, and we now have to look for money coming into the pockets of the rural consumers to really make a difference in terms of volume growth. So if the volume growths come up, and that will probably only get to know probably mid-Jan or something, then probably there could be some sort of a strength that could continue. There would be more legs to this rally. Otherwise, it probably is more of a corrective phase that these stock prices are reacting.
Okay, let's stick with, the FMCG sector. My colleague Shilpa Ranipeta got in touch with Sudhir Sitapati, the MD and CEO of Godrej Consumer Product. She began by asking him about the trends in the raw material prices and whether the benefits from lower prices will be passed on to consumers. Listen in to what he had to say.
Most commodities, which is palm oil and crude oil, have come back to normative levels. And we will price accordingly. When we did the pricing, when there was a rapid increase in commodity costs, we didn't pass on the prices to consumers. And we will do what is right for consumers. But it is certainly not an unusual situation right now in terms of commodity.
Okay. And with respect to volumes also improving, most companies have been talking about an improvement in the second half. I wanted to understand, now that we're into November, or almost the end of November, what's the picking up? Are you seeing volumes picking up in this quarter? What's the consumer demand like?
No, I think, look, volumes are a function of many things: hyperinflation, COVID bases. Things will stabilize and go back to normal levels in the next few quarters. Having said that, consumption in India is under stress and under pressure. There's no question about it. So, I mean, that on a longer term basis, that is difficult right now.
But is it still on a decline, or are you seeing a pickup? I mean, last quarter was a decline. This quarter, are we expecting another decline or single digit?
I mean, you have to separate three separate issues here. One is optics, which will change. Two is hyperinflation-led short-term volume losses. That happens when there's hyperinflation.
Right.
That will also change. And three is volume pressure because consumers in India are facing post-COVID issues. That may take a little bit longer to change.
A sense on your Indonesia business also, a lot of pain we saw last quarter there. Any improvement, any signs of picking up that you're seeing? What's the trajectory in terms of growth and inflation?
Excellent article by The Economist, which speaks about why Indonesia is such a great country to invest in and why it's got a lot of future growth prospects. So we remain very bullish about that.
All right, so that is Sithapati remaining bullish about Indonesia's macroeconomic prospects and as a result of which benefiting the company as well. Just keep an eye out on delivery though, a big mover from the lows. In fact, there were a lot of large trades that took place on the counter as well, and it's rallied about 6.5% from today's lows. It's up around 1.5%, but if you just take a look at the intraday chart, you'd realize the ferocity with which the stock has rallied after a large trade. Prakash, your views on a lot of these new age companies. I remember you being positive on delivery the last time we spoke, but you know, things seem to be on the mend for these guys. You've had a couple of brokerage upgrades come by on Paytm. Yeah. You've seen, you know, Zomato talk about less competition going forward. Brokerage is talking about Swiggy losing market share, and now we are seeing delivery move higher. Do you think this place warrants another look after the big correction that we've seen?
Good afternoon, Mangalam. Yes, you're right. I have been sounding positive on delivery for the simple reason that the business model that delivery sits on, a lot of people have tried getting into it. Most of them are unable to scale up, and they've just been funded by probably a little bit of venture capital. Some of them on private equity funds, but none of them have that kind of a sway in the market where they also will eventually get pricing power. So today you are sitting at a situation where e-commerce is not in the best of times in terms of growth. But what's going to happen is as consumption starts getting in and they expand their horizons beyond just consumer businesses to a lot of industrial and engineering goods as well on the business B2B side, it's going to be very different. So for delivery, there is a very good platform that they have created. It was just a matter of valuations. So, you actually saw the IPO at such steep prices, and that had to kind of correct and rationalize. But then, we swing between extreme optimism to this whole level of pessimism where everything looks like doomspeak. And that's exactly where the opportunity is. But I extrapolate that, Mangalam, to other companies some of the companies that you mentioned. For example, Paytm is still a no for me, though I've been reading a lot of good stuff in terms of anticipation and there's a hope trade building up. But my channel checks on the delivery business model tell you that the metrics have improved. And if all this overhang of selling pressure gets done, then probably, it's time to kind of look at it in a very different way. And it will take time for some of these stocks to recover because the damage is so deep. The adaptation to positivity on some of these names will probably be time consuming. It's not going to be very immediate. So it's not a U-turn that they'll take. It'll probably a gradual climb up. But yes, some of these names you could look at, and don't lose sight of some of the old goodies like Naukri, which is InfoEdge. Given the fact that that's an area when IT starts recovering, there's been a lull in recruitment, there's been a lull in so many other sectors of recruitment. Talent is still difficult to come by. I think that's another stock that you could probably look at in terms of regaining its past glory as well.
Some of the banks are now moving up. So Union Bank has surged close to about 3.5%. Dhanalakshmi Bank is higher in trade. Bandhan Bank, where our team was flashing that CLSA note and the upgrade. Bandhan Bank too, after the recent underperformance, is now up nearly 5%. Prakash, do stay on. Need to slip into a break. We'll come back and continue our conversation. We'll also invite Rajesh Kothari of AlfAccurate Advisors. Welcome back. Bandhan Bank is the stock on our radar. There is a CLSA upgrade. The stock has surged 5%. Vivek is standing by with the details. Vivek?
Well, that's right. So Bandhan Bank definitely the stock in focus and clearly perked up in trade, after the CLSA upgrade. So what CLSA has done is they've gone ahead and upgraded the stock. Their rating was earlier on an outperform. Now they've gone ahead and raised it to a buy. So what is it that they're saying and what is the rationale for the upgrade? Number one, they're saying that Bandhan actually has been a significant underperformer and has lagged peers significantly on the back of the fact that it has significant amount of leverage as well as exposure to MFI leverage states. Also what they're saying is that the company witnessed very high restructuring during COVID, a lot of those loans which eventually turned bad, and CLSA is actually warning or cautioning that even in the third quarter they could see some further cleanup as far as the books are concerned. However, what they're saying going forward, they are expecting benefit from a cyclical recovery as far as MFI collections and growth is concerned. Also, what they're saying is that the non-MFI portfolio is something that is growing quite consistently and provides some diversification as far as Bandhan is concerned. So multiples at this point of time, 1.6 times FY24 book, quite cheap according to CLSA, risk reward is quite favorable, and which is why they've gone ahead and upgraded the stock.
Do you like Bandhan Bank?
Rival, so, I think what they've highlighted makes a lot of sense. They've flagged off all the repair that's kind of underway. But remember one thing, there is an expectation, okay? That's the expectation that in Q4 FY23, we'll start seeing provisioning ease off. Till then, it's still going to be a little bit of a challenge. So if you see that happen, that's the time to kind of plug in. But right now, it's probably a bit too early to uncork the bubbly in that sense. Because it's just that, all the damage that it faced was so severe that it's kind of looking like it probably eases out. And remember, the report also talks about a cut in estimates. It's not that there's a big change there. And 1.6 times book is not something which is historically, compared to historical numbers, it's very cheap. It's been as low as 1.1 times as well. So, I would give it time. I mean, you have far better options in the banking space. To be honest, which are still looking very much part of a momentum, and you would probably get rewarded amply there.
Bandhan has been a huge laggard, and there have been lots of these instances where it looked like things were turning, but it never really did turn, and closer to 200 than it is to 300. So just an incredible underperformer actually. The pre-COVID level I think was about 450 or so. So forget about we're nowhere close to those levels, half of the pre-COVID level of Bandhan Bank. So that's what we are seeing. By the way, market breadth has caught up. I was saying this, that overall advanced decline has been, the gap has been narrowing all day, and now it is 1:1, almost 1:1. 1,060 stocks are higher, and about 1,120 stocks are lower. So it's almost caught up declines and advances right now. Prakash, any thoughts on AB Capital? Again, it's one of those potential turnaround candidates, right? With a new CEO at the helm.
So, again, I don't think there was anything wrong in the existing setup in that sense, and hopefully they'll probably, this will be a trigger or an excuse for the management to bring out some new, implement some newer changes, which could probably galvanize some of the, businesses which are lying a bit low. They have an amazing eclectic mix of businesses. You can't get better than that in terms of the presence that they have. But for some reason, they've not been able to spark, any of these businesses hasn't seen any sparks which could kind of start which could give a re-rating reason for the market. So I think it's too early again in this case just to celebrate that. But it could definitely have that because it has the solid makings of a good pedigree, all businesses where they are present. Great brand, salience. It's just a question of leveraging all that to show some revenue growth. They've not been able to scale up. That's the biggest problem. If they're able to do that, you'll probably see a very big delta happening from here. But I'm sure you'll get enough indications if that's happening and when it's happening.
Prakash, thank you very much for joining in. Let's also invite on Closing Bell today, Rajesh Kothari, Managing Director of AlfAccurate Advisors, on the show now. Rajesh, the big question is, after this print on the markets, where are we headed from here on? Are we likely to pause, consolidate along these levels for some more time, or do you see significant upside? Does it make sense to buy at these levels?
Well, I think it is just, if you ask my personal view, volatility, of course, would remain, and consolidation and everything will continue like as usual every time. But if you look at last 10 years, market has delivered what, about 12-13% compounded returns. If you look at last 5 years, again, it is 12 to 14% compounded returns. So it is not that, market is significantly overvalued. I don't think so. Markets are not cheap, but it is not expensive either. And people who are just waiting on fans, hoping for a correction, I think probably market is going to throw more surprises to them. So don't wait too much. I think there are a long runway ahead. I think it is the beginning of the earnings growth cycle after a very long time. The capex is going to move up. The non-food credit growth is already reflecting the initial signs of improvement. So I think the best is yet to come. And this asset class will keep delivering 12-15% compound returns for the long-term investors.
Well, we take that point. Rajesh, I was looking at a couple of these names. Laurus Labs, of course, Nimesh pointed out in the standout brokerage that we had a downgrade coming in from Kotak Institutional Equities. That stock makes lows of the day right now as we speak. Indian Hotels is the other one. This afternoon we were speaking with Quantum and they said that they have exited their position in a large hospitality company. Looks like this could be one because it's down about 10% from its highs. We had ABB India currently at the low point of trade and Nippon as well, which is currently at the low point of trade. So a bunch of stocks actually. Prashant spotted, the advanced decline line saying that both of them have merged. Now it turns out that the declines have been higher than advances, and as a result of which the Nifty too has declined from highs, currently sitting with a gain of just around 70 odd points. So Rajesh, your thoughts on a lot of these individual names which have done well in the past? Indian Hotels case in point, but now people are finding it expensive at these valuations, especially after the run-up.
Well, we are not holding that name, so it won't be good on my part to comment on it. But if you ask me, if you look at the overall economy growth, I think what is more important is look at the data points, right? And if you look at the GST collection, it is a 3-year compounded growth of 17% for the country. If you look at the the electricity demand is very strong. If you look at the non-food credit growth is very strong. If you are going out and if you are looking for a good hotel room, probably you have to pay 20% high, particularly in weekends. If you go to airports, it is a pretty jam airports. And of course, there is no space to walk on the roads. So economy is doing extremely well. The short-term volatility, the day in, out, the up, down, all these things are part of equity market. So don't worry too much about it. Get invested in the best asset class, get invested in the best asset quality, the right companies and right business models. That's what basically will ultimately create wealth, correct? So, notwithstanding the short-term corrections, if any, that's fine. But we are very bullish on capital goods. We are very bullish on banking and finance. We are very bullish on automobile and auto ancillaries. And also we are very bullish on specialty chemical as a theme. So these are the 4 sectors on which we are kind of what I would say, overweight, from sector allocation perspective. And I think probably there is a huge long runway ahead for these sectors to continue to perform even from current valuations.
This well put, and it's gotten to a point, Rajesh, where luxury car companies are complaining about SIPs and saying, well, that's the reason why car sales are down. That was quite something. Rajesh, stay with us. Another one of these names is National Insurance. That's the general insurer. If you can put this up, the code is NIACL, and it's up 14%. Right now, 13-14% right now. And if there is ever a name which kind of exemplifies underperformance, this is that. I mean, it's a government insurer, only does general insurance. I don't know if you found the name. It's National Assurance, and we'll have it up at 115. It trades at 115, 116 rupees. Listed at what? 2017, November of 2017. And you can actually count the number of up months that it has had over the last, 4 years, 4.5 years or so. Just a handful. I mean, you can count them on, one hand. It's just been a journey southwards and southwards and southwards. And today, for some reason, it is seeing a big move higher. Rajesh, names like Bandhan, which I don't know if you heard, my colleague Vivek outlined, CLSA seen an upgrade. That's been a huge underperformer. You're seeing this move in National Assurance, but there are also other huge laggards, right, which are starting to come up. Is this the market trying to, pick value where there is left? one doesn't know if there is value, but there is underperformance, huge underperformance in some of these names. So betting on turnarounds, because what is doing well is appropriately valued in that sense. Go on.
Well, I think, what is very important is to look at the value only if there is a sustainable growth underlying that value. Because if that sustainable growth and that capital discipline, which is defined by return on capital employed, if these two pillars are missing, then it is going to be a trap. And that's why people always say globally that value is a trap, right? Because value, there is always a cap on upside. So if you buy something at 0.2 price to book, you sell it at 0.4 price to book. So it means you need to get out. If you don't, then it becomes a problem because there is no underlying earnings growth. So you need to be very, very careful. I completely agree with your point that, globally as well as in India, there are many companies which do not have the solid fundamentals. They might have the fractured balance sheets. They might have zero cash flow conversion, and still you see the stocks going up 100 to 200%. Possible, but it is never sustainable. That's not the right way, to create the wealth. That's basically momentum. In typical parlance, it is called, satta market, correct? But if you want to be really into the business of serious wealth creation, then you need to be into the companies with right business models, right balance sheet, and of course, right earnings growth. So that doesn't mean you avoid, all companies which are just called value. That doesn't mean that. If you think there is a growth in that value stocks backed by the good companies, for example, PSU banks. So we own PSU banks in our portfolio, So because we believe that there is going to be a strong, NII growth, there is going to be, reduction in slippage, there is going to be reduction in credit cost, there is going to be reduction in provisions. So your return on net worth will improve for public sector banks, which was not the case for 5 years, correct? So now we are holding even public sector banks. So we are not, one should not say, I will not buy into a particular class just because it is PSU or private. Important is underlying ROE with the better earnings growth quality. And if that is coming, then you should not be, averse to investing into the same.
Rajesh, it's a pleasure. Thank you very much for joining us. Appreciate your time here on CNBC-TV18 as always. Thank you very much. Well, time for a quick commercial break here. A very interesting conversation coming up with the Revenue Secretary, Government of India, on the other side. My colleague Shireen will be conducting that conversation. We are back with that in just a bit.
Hello and welcome to the CNBC-TV18 special. I'm Shireen Bhan. We're coming to you from North Block and we're in conversation with the Revenue Secretary, Tarun Bajaj. Mr. Bajaj, always a pleasure. Many thanks for joining us here on CNBC-TV18. It's great to be back in North Block after COVID and of course before it shuts down for the budget quarantine. So it's nice to be able to speak to you in person. This is your last 48 hours in office, Mr. Bajaj. So I want to touch upon a whole host of issues with you. Let me start by addressing the unfinished agenda. And I go back to an issue that you've very publicly spoken about. You've been vocal about it since the time of the budget presentation in early Feb this year. You said that the capital gains tax needs simplification. In fact, it needs change and tinkering. In light of the recommendations that have come in, the work that perhaps has already gone into looking at what needs changing, is this the right time? Is this the appropriate time to make those changes, which you have said need addressing, need intervention?
First of all, thank you for having me for your program. Yes, I said that, and I said that immediately after the last budget. Perhaps people were not expecting me to say something which was not there in the budget. But I said that because I wanted a conversation, a debate to go on for the whole year, so that we know the views of the stakeholders, the people who are going to be affected by any changes that may happen on the capital gains. But I would say I did not get the kind of response that I was expecting throughout the year. We had done some preparation. Now it will depend on the policy makers. I'm not involved in the budget making process, so it will depend on whether they want to bring it or they want to wait a little more, do more conversation and more discussions and debate on it. But yes, one thing is for sure, that our capital gains tax regime is very complicated. It needs simplification. I've said it earlier and I'm repeating it here, that we have various buckets under which we put all products. Financial also we put in different different buckets, and then we charge different taxes on them as capital gains. Then we also have different time periods to decide short term and long term. Then in some cases we have indexation, in others we don't have indexation. So I think all this needs cleaning up, but whether the time is right now, the time maybe was yesterday, if I may say so. But whether it happens this year or not is something for us to see on the 1st of February.
Yes, we'll know on the 1st of February, but I want to understand from you, said you were expecting a conversation, a debate, but you didn't get the expected response. So what was the expectation and what are you disappointed with, if I could use that word?
I would say when I said that, I thought there'll be articles, there'll be conversation with the policy makers as to what should be done. But I didn't find so much of response to that, and I completely appreciate and understand why it didn't happen. There are conflicting interests in every body that you have, whether it's an association, an industry body. There'll be people who would be wanting, say for example, to bring a lower time zone for short term and long term for, say, real estate assets, while there would be others who would be saying no, debt assets should come. So there would be conflicting. So it becomes very difficult for you to say something on behalf of a group. So though we saw some articles and some responses individually by various players. In fact, recently, a few days ago, I saw something which actually said that equity is a market where nothing below 3 years should be counted as long term. It should all be short term and only 3 years and above. So I thought such like debates would happen, and then one can engage, one can understand. I personally feel till I was here, I didn't want to make any changes based on what my perception is, what my thinking is. The taxpayer, the people who operate in the stock market, people who operate in the bond market, who do real estate, the real estate players, they're all important players in the system. We should know what is affecting them, what is it that they want, and after all, this is taxes that we are talking about, and it can have an impact on the sale of the product. So we would like to know how it impacts each segment and then take a conscious call as to what should be done.
So, I'm not preempting anything that the budget may or may not do, but from what I hear from you, it seems like there hasn't been enough preparation at this stage to warrant a change, to warrant that simplification, which you said is much needed, but perhaps the timing at this point in time is not appropriate.
You are reading something which I have not said, so I will not say what you are saying is correct. I don't know what's going to be there in the budget. And if you say that there has not been preparation, my team has actually worked very hard on this, and I have
So is your team of the view that 3 years is the appropriate
No. That I just gave you an example. That I just gave you an example. There is no such intention to bring the equity to 3 years and something like that. That I just gave you an example of somebody actually coming out in the open and speaking, which will be very difficult for, say, the Capital Market Association or some group there to say something like that. But people here have done a lot of studies. You also know that there was an Akhilesh Ranjan committee report. There were earlier reports. They've also gone into this whole aspect, and also people from the private, means outside the government, were involved in it. They have given their recommendations. So it's not that it is not available. But I thought that in this 1 year we'll have good fights outside in the media, and we'll get to know what's there in it, and maybe then take a call.
Well,
that's the only disappointment that I was mentioning. But it doesn't mean that there is no work which has happened. A lot of work has happened. Some associations, some people have also given their recommendations and responses.
Yes, they have. AMFI, CII and many others have presented their recommendations. I want to address another issue which you have, of course, spoken about, and that is as far as GST slab convergence and rationalization is concerned. Given where we find ourselves today, would it be fair to say that we are still some distance away from any rationalization, rate rationalization, when I talk about slab convergence specifically? Because you're on the record to say the revenue neutral rate was in excess of 15%, 15.3%, and we're currently at about 11%, so there is a large gap and a large distance. In that context, do you believe that we're any closer to rate convergence?
I would also say things have changed a lot since I said that and what people were saying that. You recall your first interview with me where you said, will you cross 1 lakh crores? And I'll repeat it. Now you don't ask me that question.
Are you going to cross 1.6?
So you're going to be asking those kind of questions, the 1.6, and maybe a few months down the lane, you'll say, will you cross 2 lakhs? And so I'm saying that even with that 11.6, or it may have gone up to 11.8 or 11.9, the tax rate, we have been able to achieve 1,50,000. So we have tried other things through which better compliance and more formalization of the economy, trying to match figures that we have from direct taxes with indirect taxes with MCA. So we've been able to raise the tax revenues. So I won't say that the target of the policymaker is to reach a figure of 15.3%. That is something which was mentioned, that this is the kind of relief that was given in terms of what the revenues were coming earlier and what the tax rates on excise duty and sales tax or VAT were and what the GST is. So basically, that is what the message was, that was what the dialogue was. And as far as rationalization of slabs is concerned, if you see, it is not possible to reach a stage of 100 from zero. We will do that journey, and in that journey, we'll have ups and downs. So in the 45th and the 47th GST Council meeting, and even before that, we've been able to correct a lot of inverted duty structures of our taxes. We have also given up a lot of exemptions and also corrected another few things. We've also given some relief where it was due. So having said that, I think let's see how does GST move in the next 3 to 6 months, and then maybe the policymakers can decide what is it that they want to do with these slabs.
So what will the run rate now be? 1 lakh has been crossed. We're almost at 1.6. What should we be prepared for in terms of the monthly run rate, given the visibility that you currently have?
So what I would say, I think the average right now that we are achieving is about 1.49, somewhere around that, because April is a month where it's a good GST harvest that happens. So I think close to about 1.50 to thereabouts should be the run rate. But I would also put a caveat there that the GST will vary based on a month. It may not be so high in the month of May, June, July, but it will be high in the month of October, November, which are festival months. So it will keep changing that way, but year on year, we've had a good growth. We had a growth of 30% last year. We are having a growth of 23 to 25% this year. So if we've had these 2 years of such high growth, I think we have achieved a lot on GST, and the run rate, as you say, will be close to 1.5.
Okay, monthly GST collection should average around 1.5 lakh crores. The Revenue Secretary saying that it has actually averaged about 1.49 lakhs for the last several months. Not really going into specifics whether it'll cross 1.6 or 2, but I mean, in a way, hinting the fact that those kind of numbers will also come into view some months down the line. So that's of course been a big area of surprise and success with regards to GST collections for the government and macros overall. But we're 14 minutes away from the market closing. On the capital goods tax changes, the Revenue Secretary not really giving away very much at all. He basically is saying that we'll see what is in the budget. His team has done a lot of work towards this, submitted what they think should be done, and now of course it is to the government, up to the government and budget makers to decide what to put in. Or any changes that they would like to make, but not really giving away anything at all. It's time for our segment, D Street Chatter. Nimesh is here to give us an insight into dealing rooms and what is being spoken about and what's the flow looking like. Nimesh, over to you. What are you picking up?
Hi, Prashant. So, good day for the markets because it's holding on to the all-time high levels and it's backed by institutional activity as well. In fact, what I understand, a leading long-only FI has an active buyer in the large cap names, and that's supporting a lot of the large cap stocks for the last few days, and that's been the case today as well. In terms of sectors, what stands out today in terms of flows is another day of strong flows into financials. And within financials, the feedback is there is a lot of shift towards the small private bank stocks. That's where the focus seems to be from the large institutions. The other sector which has done well, but there is no reason or a specific reason for that to move up is the FMCG sector. All the FMCG stocks are buzzing in trade, but no specific reason, so to speak. But I understand there is some bit of buying flows from the domestic funds as well in the FMCG stocks. That stands out because of that. But overall, another strong day heading to, we are holding towards that all-time high levels, and this is backed by institutional buying as well. So that's been a big support for the Indian markets.
Take that point, Nimesh. In fact, a big move is what we're seeing in a couple of these names. HUL, for instance, has now moved to the high point of trade. The FMCG index too is within 0.5% from a fresh all-time high. Individual stocks, what are you looking at?
Well, Mangalam, so in terms of individual names, the first stock on my list today is Prism Johnson, which is Prism Cement. Yep. There is a large block deal, and post that there has been a big move in that stock as well. I understand one of the domestic mutual fund was a seller, but it's most likely going to be a DI to DI trade. So that one of the leading mutual fund was a seller, and on the other side, a large domestic fund was a buyer. So largely a DI to DI trade in Prism Johnson. The second stock is Paytm. This is interesting. Yeah. It's been buzzing in trade today. Yesterday we saw a big upgrade from CLSA last evening. The stock is up 5% in today's trade. And there is a now buzz of a corporate development as well. Remember, tomorrow there is an analyst meet as well as investor meet in Paytm at 5 p.m. So that's going to be an interesting stock to watch out for. The third is a combination of RBL and Federal Bank. Both are in focus, largely on back of strong buy flow. So, the buying into small private bank stocks is a theme which is playing out in these stocks. So that's in focus. And the last stock is delivery. If you look at the intraday chart in the last half an hour, you've seen a big up move. It's up 10% intraday. It's recovered. And there was a large block deal in delivery as well. I believe one of the private equity investors was a seller in today's block. And after that, you've seen a big move in that stock. So delivery is in focus on the back of a large block deal where a PE investor was a seller.
All right, Nimesh, thanks a lot for that. So Nimesh's list has 4 stocks. 2 of them are the old world names and 2 of them new world. Both of them are buzz. And Paytm, there is buzz of a corporate action. That is something that we'll be watching out for very soon as well. With that, it's back to you guys in the studio.
Okay, it's time now to tell our viewers what you can buy today or sell tomorrow for a reverse trade. And Mitesh is here with us. Mitesh, what have you made of the day's action, particularly in the last 1 hour? Things have cooled off a tad bit. Now we just start holding on to that 18,600 mark. Any trade?
Yeah, I think, the good thing is the holding out part. I think, despite there's some pressure in the last 1 hour, and market hasn't given away with strong selling emerging. I think that part is still missing, but I'm still worried about the overbought part. So I think the idea is that take some profits, trail your stop losses to tighter levels. 18,550 is what I recommend on this spot. About 60 points lower from here, 65 points. And be slightly slow because there could be a chance of a pullback. See, this rally started from 18,100, went to about 18,650. So a 200-point giveaway will not affect the trend, but I think traders will have to face the mark-to-market consequences. So that's the approach we're taking, slightly mildly conservative. But on the stock side, I still have buy calls. There's a BTSC call on Nestle India, which I would recommend buying with a stop below levels of 20,000 or maybe 19,990, and look for a target of around 20,400, 20,500 for tomorrow. Naveen Fluorine, on the other hand, is STBT call, which I would recommend selling with a stop just around levels of 43.25 and a target of around 42.50 for tomorrow.
All right, Mitesh, thank you very much. So those are some BDSC trades coming in. Jai Bala of cashthechaos.com is now joining us. There's 10 minutes to market close, and looks like we're going to get a similar kind of session like yesterday, right? Yesterday also the market did come off and ended about 50 points higher, and we got about another 50 points today as well. A fair bit of come off in the last 30 minutes of trade. The high was made at about, 150 or so, but, the market started coming off at 225 onwards, and we've given up quite a bit. Jay, how are things looking? A new high, of course, has come into view. Will we push higher, or what do you foresee near term?
Yeah, good afternoon, Prashant. The path of least resistance for the market seems to be higher, and the nearest resistance for the markets are about 18,800. Above that, it's about 19,100. But the markets are driving an important message for the last 2 times, which is 2 consecutive sessions when it's clocked fresh record highs. It's not sustaining and it's pushing back. If you recall from a conversation from August 2nd, I had first pointed out that even if the market were to make record highs, that'll be part of a correction. And I repeated that over several weeks or months. And the markets are endorsing that view by giving up the gains when it's clocking fresh highs. A strong market would push ahead and smash through resistances. This market is struggling. It's so that's an early indication that what I had said earlier is likely to happen. But at the moment, as long as the market stays above support at 18,130, the markets are good and safe. But you might want to get a bit cautious if the market were to come below 18,350 itself. But I'm not anticipating that. But if it does happen, be careful.
All right, we will take note of that, Jay, as we speak, because the small cap as well as the mid cap indices are both at the low point of trade. The Nifty itself has come off significantly from the highs, just holding above that 18,600 mark after testing levels closer to that 18,700 in the earlier part of today's trading session. Though one stock that stands out and stands down from the start of today's trading session to now, currently at the low point, is Laurus Labs. And don't be surprised, because we told you here on CNBC-TV18 standout brokerage note that Nimesh pulls out every morning. Nimesh, it is a 9% cut that we're seeing. What is it that has the street so worried?
Well, I think the biggest worry for the street was the fact that the Kotak has gone ahead and downgraded the stock to a sell now. And they've sharply cut the target price to 350 versus 460 earlier. Okay. It's a bit of a non-consensus view as well, right? Everybody else is bullish on the stock. So that's why it stood out for me as well in the morning. And that's the reason why it was a standout brokerage as well. Now, Kotak believes that the Laurus trouble on the AVR pricing and looming cessation of Plexovid sales are being underappreciated. In fact, ex of Plexovid, the company reported just 19% EBITDA margins in the first half of FY23. While as volumes pick up, which is quite possible, but Laurus will struggle with the AVR realizations, and they are going to be under pressure at least in the near term. And on top of it, as Plexovid sales recede, Kotak believes that the true extent of the margin hit will unravel. So that's the reason why Kotak has gone ahead and cut the EPS estimates by 18 to 28% between FY23 and FY25, and hence they've cut the target price as well, now to 350 versus 460 earlier. So a sharp downgrade and a sharp target price cut has led to a big 10% fall in Laurus Labs today.
All right, 18 to 20% cut in their EPS estimates, and as a result of which the target price has been cut, the stock down 9%. Jay, your thoughts on the diagnostic space, if you have any views on the pharmaceutical space as well?
Yeah, pharma stocks have been a little bit of disappointment. I had expected sometime in September the index to scale somewhere close to 14,000. It fell slightly short of that and then started reversing. When it comes to diagnostics, I'm even slightly negative on Dr. Lalpath. So, from a medium-term perspective, it's still got pending downsides from my opinion. But, as long as it stays above 2250, it's a bit safe. But if below 2250, Lalpath Labs starts a medium-term correction somewhere close to about 1800 or slightly lower.
Jay, do stay on. Need to slip into a very short break. We'll come back with more questions for you, as well as the closing of the market today. Welcome back in conversation with Jay Bala of cashthechaos.com. Jay, I wanted to get in a couple of trading ideas from you. State Bank of India, ITC, these are some stocks which you've identified for us.
Yeah, see, State Bank of India, it's not a fresh trade. If you're holding on, hold it with a stop of about 590. It's a trailing stop. It's possibly got fresh highs to come through. When it comes to ITC, it's starting to look like start of a short-term correction. But what we don't want to see ITC do, if you're bullish on the market, is that cave in below 334, somewhere below 351, 355. If it does that, that will point to the start of a short-term correction somewhere close to 280. But still a lot of price action left to be done. At the moment, it's just a watch. So keep track of these levels that have been mentioned.
All right, Jay, shorter conversation. We had a few more things to touch upon, but we'll do it next time. Thank you very much for joining us, Jay. I appreciate your thoughts on the market as always. But 40 points or so is what the Nifty will end higher with. So 18,605 is where we leave off. In terms of the Bank Nifty, it actually was worse off than the Nifty. Barely ending in the green. Mid caps and small caps down 0.5% and 0.75%. So even worse. Market breadth, flipped to declines more than advances. Losers, more than number of losers, more than number of gainers. FMCG perhaps is the only sector which stood out with gains in names like HUL, Dabur, Marico. And metals is another area which did quite okay. Prima.
Well, Paytm, Bandhan Bank on the back of the CLSA upgrades. These stocks were higher in trade. Dabur, which you highlighted, they're getting into the D2C business. Dabur ending with gains of about 6.5%. Gland Pharma was a big mover, potential deal with Fosun Biotech Wabag. a company that we had a chat with earlier. Also, the stock seeing significant gains. On the losing side, Laurus Laboratories down 10% on the back of a Kotak downgrade. All cargo logistics declined on very large volumes. Ircon, after the 35% run-up in this month itself, it's come in for some amount of profit booking. A couple of these big volume buzzers include New India Assurance. Volumes today are nearly 20 times the kind of volumes that we typically see, and a block deal in names like Delivery as well as Prism Johnson pushed up these stocks higher, particularly in the second half of the trading session. All in all, the indices are off from the trading, from the session highs, but the Nifty is going to hold on to that 18,600 mark. The mid-cap index underperforms with the index lower by 0.5% and the advanced decline ratio in favor of the losing side. That's a wrap on Closing Bell. Our Tuesday special Commodity Champions comes up next.